Welcome back. Wholesale inventories in the US rise 0.4% in the month of December. But what we're going to see in just a moment is that on a seasonal basis, most inventories actually decline by quite a bit. This could be interpreted a number of different ways, but what we're going to examine are some complementary data sets, and we may actually see the light at the end of the tunnel. As we can see on a year-over-year basis, wholesale inventories have been steadily declining for several years now. In fact, in mid-22, inventories for durable goods were up 26%, but as of now, they stand barely in positive territory at 1%. Furthermore, it is clear that if the present trend continues, we may actually see negative growth in stockpiles for the first time in several years. But let's take a step back for a moment and discuss exactly what happens when wholesale inventories decline. It could be the sign of greater demand in a lot of commerce. After all, if the customers are flocking to the stores and buying up all the goods before the retailers have a chance to restock the shelves, then that's a good thing. That's really a great thing. But on the other hand, if the suppliers, wholesalers, and retailers see trouble on the horizon, they may actually pull back and not take the risk of carrying large reserves. Haven't we heard recently several anecdotal tales of car dealerships with empty parking lots because they're simply too nervous to carry full inventory? Unfortunately, I suspect this may be the case. We can see wholesale inventories are broken down into several categories, one of which we're going to really dive into the details. Lumber inventories down 10% are not even in the worst position, but given its unique characteristics, I think it's worth a consideration. Over the past few years, lumber inventories have declined in quite the dramatic fashion, now remaining in negative territory on a year over year basis for approximately a year. In fact, believe it or not, in the early part of 22, lumber inventories were up 42%, but now stand at a measly 10% in the negative. A recent study entitled Lumber by the Numbers in part states that around 97% of the soft lumber is used in construction of new homes. So it's logical that when speaking about the demand for lumber, this may give us some insight into the housing market. So, what does this mean for the housing market? Is there really a connection? Well, it appears there's actually a shockingly strong correlation between lumber inventories and the Case-Shiller Home Price Index. The data suggests that when the housing market is performing well, lumber inventories surge, perhaps in anticipation of future demand. Conversely, when home prices begin to stagger, so does optimism for the housing market, and in turn, lumber. What's interesting to note is that just in the past few months, it looks like the Case-Shiller Home Price Index is starting to recover, but unfortunately, lumber inventories have not followed suit. But this pattern is not new. Consider the very well studied housing market of 2008. Notice in mid '08, lumber inventories fell into negative territory just as stocks began to crumble. But wait, there may be some good news on the horizon. Within the home building sector, there are a number of leading indicators that give us insight into the future. Construction spending shows us the planned spending today that may lead to the housing projects yet to come. Building permits are issued before any construction project begins. Here we can see lumber inventories and construction spending both declined in similar fashion over the past few years. However, over the past few months, while lumber inventories remain near their recent lows, construction spending has actually started to rise, and on a year over year basis is now in solid positive territory. Moreover, notice the very strong correlation between building permits and construction spending both display very positive trends. Could this resurgence in construction spending and building permits lead to an improved home sales number? That certainly is the implication. Of course, none of this happens in a vacuum. And how convenient these positive developments coincide with a growing anticipation the Fed is on the road to cut rates. Let's hope for the sake of these early investments in the housing market, the Fed does follow suit and does not disappoint. Just for the sake of comparison, compare construction spending for residential projects to those construction projects related to office space, shown here with a white line. These two trends seem to be moving in opposite directions. It should not be overlooked that the recent strength in construction spending is especially occurring in the residential sector and not necessarily also found in the office industry. This market still is very much plagued by lack of demand, in part due to remote work. What have we learned from all this? Wholesale inventories are declining across the board. Is this the result of more consumer demand or nervous retailers? Let us know what you think. Lumber inventories are closely correlated to home prices in a very similar fashion to 2008. Is this cause for concern and reason for hope? Leading indicators are looking up, construction spending and building permits in particular. Looking to our Fed watch, the economic calendar has not been very active, but this has not stopped a slew of Fed speakers from interjecting their opinion as to the future of the economy. Currently, we can see there's only a 17% chance the Fed will cut borrowing costs in March, while stocks just cannot be stopped. In fact, we're only a few points away from the S&P 500 reaching that huge psychological level of 5,000. While there's nothing inherently special about this large round figure, these levels sometimes do act as magnets, and markets tend to drift towards these key levels, as traders simply buy stocks under the same assumption. Regardless of why this trend exists, it's more important to simply note that it is in fact happening. Just as the markets now seem to celebrate low inventories and little chance of a Fed cut, the price action tells us nearly every economic event is worth celebrating. We hope this has been helpful. We look forward to seeing you back soon.